Welcome back. Welcome back. Time to get back to work tonight, guys and gals. Hope you guys had a fantastic weekend, but it's about that time of day again here after all. Monday evening, it's April the 12th, 2021. My name is Joseph, and as always, welcome back to your nightly newsletter. And if you're tuning in for the first time tonight, it's great to have you with me because my job tonight is to help us find the best trade setups for tomorrow. That's Tuesday's trading session. I got a great video in store for you guys tonight. Charts are already in the background, as you can see. Got the E-minis, got the NASDAQ, and we got the gold on our radar for tomorrow. Nice setups we're tracking for Tuesday's trading session. Here's the big question for tonight's video. What's the best way to trade these ranges? S&P range, NASDAQ range. Gold may not look like a range, but remember that range from last week? Yeah, it's still playing a big role here on the gold for tomorrow. So how do we trade these ranges, right? Big bull ranges on the E-minis, bear range right now on the gold. We're talking fake outs. We're talking breakouts. We're trading rotation. We're focused on failures. I am really excited for tomorrow's trading session. I want to make sure you know where all the best trade setups are going to be. Before we jump in, though, and get our hands dirty on these charts, I just want to make sure to remind you, if you haven't done so already, make sure you subscribe to our YouTube channel. We publish this video newsletter with our best trade ideas. We publish it every evening here on our YouTube channel, so make sure you subscribe to our YouTube channel, and that way you don't miss tomorrow night's video newsletter. And don't forget, guys, if you have any questions for me, drop those questions in the comment section. I'll get them answered as soon as possible for you. And if you appreciate the video, if you guys enjoy the video as much as I enjoy making it, if you love this content here on the YouTube channel, do me a big favor, hit that like button, hit that thumbs up button for me here if you guys enjoyed as much as I enjoy making it for. But enough of the intro. I'm a few minutes late here tonight. Hope you guys had a great weekend. Welcome back. Third week of April. And what do we have here in front of us? Like I said earlier, ranges. I've got a range on the S&P, a range on the NASDAQ, and you can't quite see it, but there's a range over there on the gold right now. So, the E-minis are pretty simple, right? S&P, of course, and the NASDAQ were bullish, and we're currently trying to break above that trading range. Great shots to sell short right now as we go higher. Would love to get some shorts going on. Would love to trade a breakout up here as well, but we need to see a little more proof in the pudding here as we go higher. But I would love to get some shorts off the highs, buying off the lows. Same thing here for the NASDAQ. NASDAQ trying to break above that trading range. Would love to find some shorts down here. Would love to trade some breakouts on the way back up to those all-time highs. And of course, over on the gold, gold had that big range from last week, and now we're rotating back down here. Gold's got some big targets waiting down there at 17.19. 17.18. I would love to find a nice short here on the way down to that 720 area here tomorrow. We'll also keep an eye out for a hard bounce on this, maybe a reversal off of that low. So there are plenty of opportunities going into Tuesday's trading session. Lots of ranges, lots of breakouts, lots of fake out breakouts. We're going to put the whole plan together tonight in this video. Don't you worry. Before we jump in, though, let's make sure we take a look at the calendar for tomorrow. Tomorrow is Tuesday. It's April the 13th. Now, of course, this is the third week of the month of April. The third week of the month does usually mean more volatility, especially as we go into the last half of this week. Friday is a big day this week. We've got the OPEX, right? Options expiring third Friday of the month. We're also going to hear from that Q1 out of China. Their GDP report comes out on Thursday night. So Friday does have a very good volatility look to it. We'll talk more about Friday's trading session, though, once we get closer. But it does look like we should see volatility pick up as we get later on in the week here. As we look at the news for tomorrow, you'll notice there are two kind of big themes tomorrow. One is that CPI report at 8:30 Eastern time. We're talking inflation, right? Consumer prices. They're expecting a very big number tomorrow morning at 8:30 Eastern time. You know what that means, right? If they don't get that big number tomorrow, that's where the big opportunities are going to be to fade the moves, catch reversals, or if they exceed those expectations, continue that move going higher or going lower. So a very important news report tomorrow, 8:30 Eastern time, that CPI report. Now, We've also got, as you can see lower on, right as we go down here, a lot of Fed speakers. And you're going to see a lot of Fed speech here this week. This is the last week of the month for Fed speakers to kind of voice their opinion before they go into the lockdown week next week, right? So a lot of Fed speakers this week. If you are trading tomorrow afternoon, you definitely may see some movement out of whatever comes out of Harker and Barkin and right, and George and Daly's mouth tomorrow afternoon. Not a lot I can do to anticipate it, but that is something I'm watching here tomorrow just after we go into lunch, right? Do these Fed speakers, do they put their foot in their mouth and contradict Jerome Powell, right, who's come out many times and basically said they're going to keep supporting this economy, right, with whatever fiscal, weapons they need to at the Fed. So we'll see if anybody, steps into his toes, if anybody kind of breaks the ranks tomorrow afternoon. That may be a market moving opportunity as well. So those are the two main components for tomorrow. 8:30 CPI report, and then of course that noon block, right, of a bunch of Fed speakers. Definitely watching for some opportunities as we go into the early part of the afternoon because of it. So big news early, right? Some speakers late in the day tomorrow. Should be a very busy day in our trade room. Don't forget, we open up every morning at 8 o'clock Eastern time, Monday through Friday. I would love to have you there, right there with us. You can grab all the membership info you need in the description of this YouTube video. But let's get back to the charts, though. We'll talk about what's happening. We got a lot of news about Wednesday, big day on Thursday, big day on Friday, so we'll come back and we'll talk about that in tomorrow night's video. But of course, CPI, right? Consumer prices on our radar tomorrow, and Fed speakers as we go into lunch. Range. Lots of ranges here on the charts ahead of us. I love range-bound markets. Buy low, sell high, focus on failures, right? Resist the temptation to chase the breakouts. That is the plan of attack here for tomorrow. Let's jump in first to the S&P here tonight. S&P is a pretty straightforward plan here. The S&P and the NASDAQ are both relatively straightforward. We've got a bull market in our hands into a trading range. You might call it a spiking channel, right? You might call it a spiking channel. The rotation, though, the rotation doesn't exactly say it's a spiking channel, though. You can see it's really rotating well inside of that trading range. So, maybe we call it a spiking channel. I would call this a bull market into a trading range. Remember, anytime we have a range-bound market, that range with all of those overlapping candlesticks, flat moving averages, ranges act like magnets, right? So, it's a relatively easy plan of attack here for tomorrow. As we go above the top of this trading range, I'm finding levels of resistance overhead, right? Resistance overhead, and trying to basically sell back down into that range, right? Use that range as a magnet. At the same time, if we do end up getting that short off the highs, we then can look for buy setups to buy at the low. In fact, we call this range rotation, right? So imagine now that range is a magnet. The price tries to break higher. We find short setups to sell off resistance levels above the range. Great spot right now. And oftentimes that rotation will take us all the way back on the kind of the opposite side, right? We call this the pendulum swing, right? The amount above is the amount below. And then oftentimes we can focus on selling off the high and then buying off that low. That's the key to a range, right? Buy low, sell high. And that's going to be kind of where my bread and butter will be here for tomorrow. Now, we may also see, because you probably have noticed, right? The buyers have been quite feisty over the past few weeks, right? Lots of stimulus. We got earnings season starting up later on this week. So this could be a stubbornly bullish market. Let's put it that way, right? We may not be able to get that short off the high here as easy as we'd like it to be. I got a measured move overhead. That is a quad measured move. Now, where do I get that kind of objective, right? If I had to guess right now where these buyers might be trying to get to, that 41.35 and change up there, if you go all the way back, and I know it seems like forever ago, remember that big range we had? What was that? Beginning of last week, right? Just that nasty couple day range right there. Well, we get that breakout, and you'll notice when we break out of that trading range, one leg up, 2 legs up, 3 legs up, right? So usually these breakouts, even the strongest of trends, they oftentimes run out of momentum around that 4th leg. You can see the 3rd leg obviously ran into that trading range today. But if they did try to go higher here, that quad measured move, that 35, we'll call it 35 half, 35 and 3/4 up there, that's going to be an easy place to think these buyers are probably trying to get to. Now, the hardest part, the easy money will be buying off the low and selling off the high. The hard part tomorrow is going to be getting in somewhere right on the way higher here. That's where the challenge is going to be. If I had it my way tomorrow, right? Let me clean this up here. If I got exactly what I wanted here tomorrow, I would love to get this market, and they could do it now, they could do it later. I don't really care where it is, but I'd love to see this market pop up. Again, we're above the range here. The range acts as a magnet, and I want to sell back down into that trading range. The only problem we have here is that we have all of this bullish momentum, right? So I'm not going to be that foolish and just try to call a top right in this very bull market right now. What I will do, though, is if I can see these buyers struggle, if I can see them try once, if I can see them try twice, I would love to slip my order to sell in right underneath those lows and sell into some stops, right, for a nice collapse back down into that trading range. Now, another one of my favorite techniques of trading these types of failure patterns is I like to look for traps up above these highs, right? So imagine a little trap above that high. Also, too, a trend line coming off of that high. So there's a couple different ways I can get short, right, off of that high. What I'd love to do, though, is get up, get those buyers trying once, right? Imagine now, right? They pull back. The buyers are trying to run up to that measured move, but again, there's not much space up here. It's very difficult to justify buying a pullback when all you have is that little open space up there, up overhead, and there's not much else to work with because we're at all-time highs right now, right? So it's not exactly easy to find big targets overhead. So I'm going to focus on the sell side here as we go. I want to see buyers come back, try to buy the pullback once, see them try to buy it again. I can draw a trend line off of that low, trend line off of that high, right? I can short off the trend line. I can short into stop losses for that collapse now going back down into that trading range. And again, don't forget, the amount above the range is oftentimes the amount below the range. So try to take a piece of profit off at the other side of the range and then leave that runner for that pendulum swing, right? We go up and the pendulum swing back in the opposite direction. Now, as I mentioned earlier, I would love to buy down here too. So imagine now we go up, the buyers struggle, they fail, we get that short, right? And now we end up swinging back down on the side. Now, how do I get long on this side of the market now? Well, here's the problem again. Even though we're overall bullish, if the market pops up and collapses here and runs lower, this is going to be a very strong momentum move for those bears. So if we go up and come all the way back down again, this is where we have to break out that same type of patient failure setup, right? Wait for the bears now to try once. Wait for them to try twice. And what I'm doing is again, I'm using the middle of that range as a magnet, but I'm understanding that there's a lot of momentum as we come off of that high, right? What we're using the range as the magnet, but we're understanding how momentum plays into this and using the bear, basically using the seller's stop losses as the gasoline we need to run this thing back up into that trading range, right? These types of failure patterns, these kind of what I call nested failures, are really powerful tools whenever you're trying to, again, trade those ranges, but you're worried about momentum, right? I'm worried about the bulls up here, so I'm let them try once, let them try twice, and short back down. At that point, I'm worried about all of that momentum carrying it into this big range where we came from last week, right? There's a range down there too. This could easily pump up, roll over, and just keep on going, right? I don't want to just simply buy into those lows down there. So if we do end up down at those lows, really very similar, right? Let those bears try once, let them try twice. Can I get that trap low, right? That would be ideal. If not, how about a trend line off that high, right? Off of that low. Again, I can buy off the trend line. I can buy that trap. I can buy into stop losses with those failure setups, right? In this case, this one's called a nested failure. Now, guys, there are a lot of different variations of these failure patterns, and a lot of it has to do with momentum or location. I won't be able to go over all the details in this video tonight, but I will go over more of those details of how we use different variations of failure patterns. I cover all about the failure patterns, all my favorite entry patterns. I cover them in my free trading course. So if you haven't done so already, I would grab that link that popped up there. If you're serious about your trading career and you want to get a deeper dive into all these specific entry techniques that we use every day in our trade room, grab that little free course pop up there. I cover all the details of my favorite trading strategies, all my entry setups. They're all covered in that free trading course. Not to mention, I'll send you hundreds of examples of how I apply those setups to our favorite futures markets. So grab that link that popped up there. You're going to love that free trading course. That way, the next time I say nested failure pattern, you'll know all the rules, you'll know what they look like, and you'll know how I like to trade them in our trade room. Now, the next thing is what does a breakout look like, right? What does a range breakout look like? At this point, we've talked about buying low, right? We talked about selling high. What does a breakout look like right now? The hardest breakout for us is going to be this one going higher here. Now, breakout patterns. When I think about breakout patterns, I always think about these 1, 2, 3 breakouts, right? I never trust just a strong move higher, right? I never trust just a strong move higher. But if they can give me a strong move higher, hold the pull back to the moving average and jump off that moving average, now that gives me the green light now that this magnet range has now been kind of broken down, if you will, right? The magnet is no longer as magnetic as we thought it was. So once I get that 1, 2, 3 breakout pattern, then I know I have enough momentum on the side of the bulls, and I can mark up my high, I can mark up my low, and I can buy that first pullback. Now, that first pullback, I'm not just blindly buying it, right? I like to look for entry patterns such as seller failures or bear traps. And bear traps are definitely going to be probably the most important entry pattern to buy the low of that channel because of where we are, right? Because of that measured move. And again, I cover entry setups like traps, like failures inside that free class that I mentioned in the upper right-hand corner. That is not going to be an easy trade right there. This will probably be one of the most difficult, not the most difficult, but one of the more difficult entries here because we have to wait for the confirmation of the breakout. Then we're going to make sure we really kind of thread the needle there and get in before we get up into that measured move overhead resistance. I'll be looking for bear traps at the low of that channel here for tomorrow. The easier breakout will be if we rotate going lower. Right, we talked about if we go lower, I'll be looking to buy at support levels below the range using that 1, 2, and then back up into that trading range. Pretty easy pattern setup. If the sellers can hold that pullback, right? If they can hold it and start to go now we have that 1, 2, 3 breakout move that I talked about, right? 1, 2, 3 breakout. Now again, it's not enough to see a strong move lower. A strong move lower is just a nice buying opportunity here for those range breakout failures. If they can hold that pullback and go, now we're on to something. Now I can mark up that high. I can mark up that low. Sorry, backwards, right? It's a Monday after all, right? Mark up the low, mark up the high, right? I'm not trying to draw the trend line like this. I'm drawing it off of those lows, and I'll bring it right up around those highs here. And this is where the magic is. You know, I always tell my clients, if you have enough momentum going lower on this, you want to make sure you find a way in off the first pullback, off the high of that channel. And again, I'm not talking about pullback setups. I'm talking about most of the time, we'll look for those buyer failures, those bull traps into pullback combinations, into strength moves, and you'll learn all about those entry techniques in the free course I mentioned earlier, right? But that's what I want to be looking for as we roll over, right? So it's 1, 2, 3, momentum picks up. I'm not selling the first pullback, right, I'm selling the first one after we get that 1, 2, 3 breakout move. And as I mentioned earlier, right, we've got this range down here acting as a magnet. Big bulls, I would imagine, on that big low at 40.81 if these bears can really sink their teeth into this. So again, pretty straightforward plan on the S&P. We're buying low, we're selling high. I would love to short these highs here. I'd love to see us get up. Buyers trying once, buyers trying twice, right? Trap high, hidden channel, shorten back in, and then if we get lucky enough, we might be able to get this price go up, fail, come back down. Imagine we take out those highs up here, right? That measured move. And then imagine we get the 1 try for the buyers, the 2 try for the buyers, we get that short, right? However that setup triggers, and we get this thing to collapse now back down in. That will probably be enough momentum for us to draw a new channel off that low, a new channel off that high. If this thing really starts to move down quickly here, we can definitely now look for that short to finish off the pendulum swing on the other side, right, of that range, right? And again, we're not just simply blindly selling it. We're looking for one of the entry triggers I've talked about many times already. You can learn more about those in our free trading classes here at School of Trade. Looking pretty good. Very excited about tomorrow on the S&P. I would love to see him pump it up and then dump it back down here, or a nice easy rollover and short that first pullback right after we get the completion of that 1, 2, 3 move. All right, S&P looking pretty straightforward. How about the NASDAQ here for tomorrow? NASDAQ is pretty similar to the S&P. The one big difference, of course, on the NASDAQ right now is the NASDAQ is still trying to retest those all-time highs. We do have a bull market, as you can see right now. I've got this bullishness, of course, from last week into a trading range. Ranges, of course, act like magnets. What do we do in a range market? We buy low at support below the range. We sell high at resistance above the range. We buy low, we sell high. We focus on what? We focus on failures. Wait for failures to trigger, and we buy low at support, and we sell high at resistance. The range is the magnet. We got our battle zones above and below. I've got great levels now of support down below me. Great easy areas of resistance up above me overhead. I've got my pendulum swing below, pendulum swing above. I've got my measured move off of that low. This whole area up here is a very attractive area for short selling. Yes, we are very bullish, but again, as long as we have patience and the right entry set up, you can make money on both sides of a very strong bull market. And if the bears can take control of this, you'll notice we have that big range from last week's trading session, which would love to drag this market back down to that 13,720, 13,700 with the big target for tomorrow, much like the S&P, right? Just like the S&P there, 13,654 at those lows here. So not a lot is different here on the NASDAQ. I will spare you the broken record, but we definitely have a lot of overhead resistance, specifically in this area right there, right? I mean, that really is kind of where the prime spot would be, right there, right? Take out those big highs. Get those big highs from before, take out those big highs, get that pendulum swing, get that measured move, and then look for that short coming back down in. Now, we don't actually need to go all the way up, right? We just got to get to a level of resistance above that trading range. I think my only real concern right now is this rising support trend line, which the S&P didn't have a problem with, right? S&P, look at the S&P here real quickly. The S&P really doesn't have that problem, right? We get the S&P going higher here. There's a lot of space down there before we have to run into that rising support trend line. The NASDAQ is not as lucky as the S&P is, and that's, in fact, why I do the channel like that, right? If we go higher here, that's probably the only concern. That and the fact that we still haven't reached those all-time highs yet. So there could be a little bit of that going on, right? Everyone's kind of blindly buying until they reach that all-time high. So, very similar to the S&P, but as you can see, there are going to be some differences here. The key right now is I want to get higher, right? I want to get up into these areas of resistance. Now, regarding failure patterns, we talked about the fact that there are lots of variations, right, of these failures. So here's some things to consider as we try to sell off of this high. If I want to sell off the high right now, here's like, for example, I don't want to sell into that trend line. Now, we're bullish, right? So for me to want to sell, I have to wait for the buyers to try twice, to give them the benefit of the doubt. So let's say, for example, here's one example, right? We pull back to the moving average. The buyers try once. The buyers try twice, right? I can't sell that one right here, right? I can't sell that. That's not a very good short, right? In that situation, I'll look for a trap above that high. That way I can get in without selling right into this area of support. Traps, which you're going to learn all about in that free course that I mentioned, linked up in the upper right-hand corner there. You'll learn all about why traps are important. Traps are great because they're going to help you get in this case, selling as high as possible so you're not selling right into that low, right? That's a really good example of where a trap would be necessary on a nested failure pattern. It's the same basic idea as we had in the S&P, except this one, I have to have that trap because I don't want to sell into that rising support. But let's say, for example, though, we take out that measured move, right? The moving average comes over now, and now we go something like this, right? One try up, two try up. See, now I'm not so worried. Now I can draw that trend line. I can mark up the kind of the high of that channel, if you will. And I now have a much easier job now selling off the top of that channel. I'm not so worried about the open space below, right? I can take a good 1-to-1, take some profit off the low, leave the runner right down as the pendulum swings back in the opposite direction, right? Does that make sense, right? So it all depends on, again, same basic idea. I want to sell above the high of this range because the range is a magnet, but at the same time, I have to treat the bulls with respect because they have control momentum, let them try twice, and B, I got to watch out and make sure I'm trading around, quote unquote, around that rising support trend line. So I'm not simply selling into support blindly and just hoping the trade works out for me. Now, of course, as we go higher here, or should I say as we go lower, the same thing goes into play now, right? Same thing as we talked about on the S&P. If we go up and we get that short off the high here and we come crashing back down now, yes, we are overall bullish, but this is going to be one hell of a bear market if we go all the way up and then rotate all the way back down, right, on the other side, right? So if we end up taking out those lows, we go up, end up taking out those lows right now. Now, as that moving average comes over, I've got same problem, right? Momentum is still a big, big concern. Now, the good news is there's no falling trend line in my way, so I don't have to worry about that, but I do have to respect momentum. So bears try once, bears try twice, and again, lots of variations of how this pattern works. My goal, though, is to literally trap in those bears, use those stop losses as fuel, right? And buy into those stop losses. Now, sometimes what happens is in a bull market, right? Everyone steps into this. Everyone buys on that deep, deep pullback. And these things will oftentimes really rocket running higher. If you see the market really jump going higher here now, you know what's going to go on, right? They're trying to make a full pendulum swing back in the opposite direction. If you have enough momentum with that 1, 2, 3 move, right? I know it's not exactly a 1, 2, 3 move, but it's kind of, right? That 1, 2, 3 move, like back here, right? 1, 2, 3 move, that pullback, right? People are going to buy that pullback. They will. So that is something to watch for. Mark up that high, mark up that low, moving average comes over, right? And again, we're not just simply blindly buying that low. I'm using things like my failure patterns, my trap setups into pullback combinations. You'll learn all about those specific entry triggers in the free trading course in the upper right-hand corner there, right? Grab the little pop-up there and grab the free course to learn all the smaller details I can't cover in this video. So definitely some opportunities here, buying low and selling high. Now, how to trade breakouts, right? Breakouts are a little bit more difficult here on this NASDAQ for a couple of reasons. One is we have that all-time high up there, and people do just crazy things whenever you got the all-time highs. Now, real quickly here, though, let me back it out real quick so you can see where I get these levels from. If I back this thing out, just like the S&P, there's that trading range from what is that? What is that from? Late last week, the 6th? Yeah, so early last week there, right? The 6th of the month. We had that trading range. We have that big breakout. That's one leg. Second leg goes higher. They run into resistance. That's where that third leg comes in. right? So that major measured move, that triple measured move top up there, that's where that level comes from, right? Back to that range breakout we had middle of last week here. Then I've got my smaller measured move, which you probably saw before, right, is plotted right there. So that's why I like this area right here. This whole area right there, I really like the way that thing looks here for a short. Now, what could I do to buy this thing as it's going higher? In my opinion, the best breakout pattern that we're going to look for here on the NASDAQ is, don't get me wrong, I would love to see a 1, 2, 3 move. The problem, though, is when we get up into these highs up here, we're going to be right into a lot of resistance. So whenever I'm concerned about buying too high, what's the best way to do it? Traps, right? Traps. So I'll be keeping an eye out for my 2-try trap setup. I'll be waiting for a strong breakout. I'll be looking for a shallow pullback to the moving average, a higher high in price, and a trap below that low. Now, extra bonus points if you can combine that trap with the low of a channel. You don't need to have it like that, but boy, oh boy, it doesn't hurt, right? Definitely doesn't hurt, right? So you want to think about how can I draw that channel now, get that channel in there, right, and buy off that low even better. So my concern is not so much momentum at that point. My concern, though, is can I buy safely without buying right into that high? And the easiest way to avoid that problem is to look for traps, right? Traps are always kind of my go-to setup anytime I'm worried about buying high or worrying about selling low. And again, you'll learn more about the trap patterns and the failure triggers and all my favorite entry triggers in the free trading course. So that's kind of what I'm looking for here, right, on the breakout going higher here. And again, I wouldn't be surprised here if we saw this thing run up right into those highs, and by middle to late morning tomorrow, the buyers have tried once, the buyers have tried twice, right? We're finding that channel, we're finding those traps, and we're shorting off the high into that reversal back down, mark that low, mark that high, right, and shorten off that one too, right? That would just be right. That'd be great, right? That would be ideal for tomorrow, right? We get up around the highs. Buyers try a couple times, right? Buyers kind of dig their own graves, so to speak, and we simply hit them into their stops, and we ride that momentum as it rotates back down again. We ride it back down into that trading range. So keep that in mind here as we do go higher. We may also see, if you want to go through some more variations, we may also see the market jump up like today and just go sideways up here. Right? So, if we just sit here and go sideways for a while, right? If we get another one of those, strong breaks higher into a trading range, it's a range-bound market. It's a bull bias. What do? We find support levels below the range, and we combine those support levels with what? Failure patterns, right? It's a bull market. Wait for those bears to try and fail and buy into those stop losses for what is usually a pretty easy rally going higher, right? Anytime we have a bull market into a trading range, we want to buy low, right? Buy low, buy low, buy those support levels below the trading range. That's exactly what we'll try to do here if we do get that strong spike and we go sideways, right here for tomorrow. But, again, as the price goes higher here, I will definitely be looking forward to that short off the high. If we do roll over, right? Let's say, for example, the buyers just quit on them, right? We roll over again. Bears try once, bears try twice for the buy going back in the range, or they hold the pullback. The bears take control now with that 1, 2, 3 reversal, 1, 2, 3 breakout move. Momentum now starts to pick up. Now I can draw that low, find that high, and of course I can sell short off the high of that channel. Right? Again, looking for bull traps for the entry, looking for buyer failures into pullback combinations, into strength moves going lower. Now, where do we think the bears want to go at that point? Again, we've got that big objective down there at 1654, give or take a few ticks. It's a pretty impressive level down there. 1660, 1655 there, that prior high there. That'd be an easy target for short sellers if they can get this thing to really break free of today's trading range. All right, I think I've covered most of the bases on this. I'm sure there are a couple variations I didn't see on this video tonight, but not to worry. Tomorrow morning, 8 o'clock Eastern time, I'll make sure we cover all the bases tomorrow in the trade room. Last but not least here, over to the gold. A little bit low volume this week on the gold so far. It's only a Monday evening, so hopefully that will improve here as we go into the rest of the week here. What do we know about the gold market right now? As I mentioned before, it's all about ranges. Now, I kind of zoomed all the way out in this chart because I want you to see kind of what's going on here. We have this range, not from Friday last week, but last Thursday, if you recall. So last Wednesday was a big run up. Last Thursday, the market consolidates, right? Friday, of course, that big jump higher. Wednesday, Thursday, Friday comes back down into that trading range. Now, at this point now, we have this range. Imagine the range now acting as a magnet, and we have all of this momentum now swinging back down for the bears, right? So bull market into a trading range. Early last week, we see the breakout going higher. We take out some major areas of resistance, and sure enough, right, buyers try once, buyers try twice, and we run back down into that hidden channel pullback. Same thing we talked about many times already on this video. We get that strong run down. Anytime we see this much strength in one direction, you have to expect you're going to see a pullback and a retest of that low, and that's exactly where we are right now. So if somebody asked me what's going on with gold right now, I would say gold is pretty much trying to complete its rotation back to the other side of this trading range. We recently completed a strong move down and a retest of that low. And so we're kind of, we're obviously bearish right now, but we're sitting on some major levels of support, right? And that's one of the biggest clues here, because I either want to see this mark keep going lower, right, kind of hold those levels, or I want to short a pullback here right now and keep this party going to the downside. That's pretty much the plan of attack here on the gold. If I had it my way tomorrow, right, if I got what I wanted tomorrow, I would love to get, I'm going to draw a trend line off that low, a trend line off that high. If I get it my way tomorrow, I would get us now up into that high, get those buyers to think this thing's reversing, get them long off the moving average, and we can sell into stops. We can sell pullback combinations, right? Basically failure into pullback combination off of that high. That's what I would like to see here for tomorrow. So again, we have kind of get this range up here. If I can kind of make it a bit easier on the eyes for us here. There we go. That'll make it a little bit easier to see. Perfect. So again, we've got this strong move down. They retest the low here. Do we keep grinding lower? That's an option. We'll talk about that in a second. What I'd love to get, though, is get this thing up off that low, get up into those areas of resistance, get those buyers, right? Get those buyers to get, again, trapped buying that pullback, right? Much like back here, right? We go up, buyers buy it, and they fail back down in. Same idea, right? Stops are right below the lows. We can sell into stop losses. And then if we get that strong move lower here, I like to look for that follow-up trade on the way lower. Yep, back to those lows here. Again, it's a buyer failure pattern into a pullback combination. These combination setups happen a lot, right? Failure into pullback combination. That would be kind of what I would like to see here on this for tomorrow. There may be some variations of that. For example, you'll notice, right, I've got this narrower channel, right, this smaller channel coming down here. We may not get that deep of a pullback right now, and the next best pattern now will be a trap entry off the top of that channel just above that prior high, right? Not a bad setup at all. Right, we call these two-try traps. Strong move down, shallow pullback, lower low in price, right? Trap entry off of that, right? Off of, again, just above that 36.4, off the top of that channel. That would be another one I would love to use going forward. And then one more variation would be, what if we made it all the way back up to these highs, right? What if this thing just rips higher, takes out these highs? Now what's the problem? The problem is not location. It's actually a great location for a short because, again, you've got that trading range, right? But the problem is momentum. So how do we deal with that? If the market makes a strong run higher here, takes out these highs, no, we don't want to buy this thing, that's for sure, right? We're buying above the high of that range at that point. If we do make that strong pop, we take out those highs now. Now you break out the big guns, right? Let them try once, let them try twice. Again, draw the trend line, look for that channel, short the channel, right? Or find that trap, love me some traps. Either way, right, whatever variation we get up there, I'm looking for those nested, I call them nested failures because it's a failure inside of that prior failure. Okay, great shot there to sell back down again. And then, of course, if the market does keep going lower, right, that is a very good possibility here, is this market may just simply keep grinding down to complete this pendulum swing, complete the measured move as we go lower. If it does keep grinding lower, not a lot changes, right? Not a lot changes. If it does keep grinding lower, though, that will take this channel out of the picture. And think about this kind of grinding lower here right now. If we grind lower, I'm looking for traps, right, off the high of that channel. Same thing as before, right? Find those traps off the high of the channel. If for some reason we see a bigger pullback, so it's on a trap, a failure, right? So traps, if it goes, traps are great, but you need to get a nice strong signal, right? Coming off of that swing high, off that channel. Sometimes we don't get that signal. Sometimes the market will poke through those highs, and in those situations, we're going back to a buyer failure, right, into pullback combination to short the pops, right? So those are some things I'm watching for as we go lower, right? If it grinds lower, I can definitely use those traps as long as I can get a good signal off the top of that channel. And again, I talk about what a good signal is. I talk about these entry rules in the free trading course, right? So make sure you grab that link in the upper right-hand corner. I also put all the links you guys need in the description of this YouTube video. So grab all the links you guys need down in the description here of the YouTube video. So that will definitely be a good trap there for us. If we don't see the trap signal and the market bounces hard, that's where, of course, we look for those buyers coming over, have them try to buy the pullback, and again, we can sell into those stop losses. So traps are good for shallow pullbacks, deeper pullbacks. I rely on failures. And again, we know where the market wants to go, right? Trying to get down to that pendulum swing, down to that measured move. At what point do I buy this market tomorrow? At what point can I buy this? I can buy it if we take out these lows, and then bears, of course, try once, try twice, right? I can use those same nested kind of reversals, nested failures. I can buy that as well. Right? Remember, though, you want to make sure we take out those lows, though, right? We don't want to do this in the middle of nowhere. We want to do this at a major support level, like a measured move, like a pendulum swing. That is one way to buy it. Or if we do get that strong run higher, if the buyers can hold the pullback and make a run, they're going to be trying to hunt for that high of day up there. I can easily now mark up that high, mark up that low, and as always, right, I'm not going to trust the first pullback, but I will gladly take the first test of the low of that channel. It would be a bear trap, right? It'd be a seller failure pattern, right? Oftentimes those failures lead into pullback combinations, right? Into strength moves going higher as they try to take out that 1758. If they keep going up from there, 1774 is the next big objective overhead. That 74 level does seem a little bit out of reach here for tomorrow, but we'll see what happens, right? We'll see what happens here. Bottom line is we get a great plan of attack here for tomorrow's trading session. Tomorrow is right around the corner. We open up in our trade room at 8 o'clock Eastern time. We'll prep our mindset, we'll prep our charts, and we'll get after it tomorrow morning together in the trade room. And guys, don't forget, joining us every morning is super easy. I would love to have you there, right there with us, 8 o'clock Eastern time. I'll put all the membership links you guys need to come join me every morning at the opening bell. I'll put everything you guys need either in the description of the YouTube video, or I'll put a big button for you right below this video on our trading blog. So grab that link in the description, hit that button below me tonight on the trading blog, get registered for tomorrow morning's trade room. And don't forget, if you guys have any questions, I'm always here standing by. You can always call that toll-free phone number. You can always use that live chat on the left, live chat on the right. And as always, you can drop some questions in the comment section below if you guys have any questions along the way. But that is it for me tonight, guys. Hope you learned a bunch on tonight's video. Hope you subscribed to our YouTube channel, and hope to see you guys tomorrow morning at the opening bell. If I don't see you tomorrow, make sure you come back and see me in tomorrow night's newsletter, because we get some more big news coming on Wednesday, some more big opportunities in this third week of April. But that's it for me tonight, though, guys and gals. Have a great rest of your evening out there. Rest up. We'll see you guys tomorrow. Be well out there. Be nice to each other, will you? And be here next time. Adios, amigos. Bye-bye for now.